All right, welcome back everybody to Altcoin Daily, where you subscribe for a video keeping you informed on this emerging crypto space every day. My name's Austin. There's an issue that I personally have right now involving this emerging crypto market. Not many people are talking about it, and I want to share this with you today. And you know what? Some people are going to call this FUD, and that's okay. Because on this channel, we're not only going to talk about all the promise that this crypto market brings, but in 2020, I want to be a smarter investor. I want to learn more so I can invest better. And you know what? I'm not a financial advisor. I cannot see the future. But in today's video, I want to talk truth and share with you some perspective where Bitcoin fits into this looming global recession and where altcoins fit into this looming recession. And to do that, I want to get some perspective from Andreas Antonopoulos off the What Bitcoin Did podcast. Now, I've liked this video. I want to support him. We've recommended to you the What Bitcoin Did podcast as a whole. Check it out. It's a great conversation for a whole hour. I really recommend you watch it. There is a link in the description below. But listen to the 60-second clip about the problems with traditional finance and about how irresponsible the banking system is right now.
Don't let the Lehman Brothers and the Goldman Sachs and the Deutsche Banks that are actually zombie banks that are functionally insolvent, if you don't let them take the losses, get broken apart, write off the loans, take the hit, burn the investors who took those risks, and do it on a small scale, and instead, they get bailed out. They get a new method of accounting where they can hide these losses. They get zero interest money where they can basically accelerate and increase their leverage. They simply double down and make it worse. And if you repeat that enough, and we've now been doing it since the early 80s, again and again and again and again and again, you build up the undergrowth, the dead wood in the forest layer, if you like, of the economy. And you have all of these zombie malperforming companies that are not going out of business, that are keeping all of the capital and the workers and the equipment tied up because they can get yet another junk bonds loan from a non-performing bank that itself is insolvent but is not being allowed to go under, et cetera, et cetera. That system is fragile. In 2008, we saw it almost blow up in our face. And once again, the solution was to not let it clear out the dead wood, but instead fuel an even bigger set of bubbles that's going to blow up even harder next time.
Wow, I like that perspective. And honestly, it's something that you probably already knew. But think about it. For the first time in US history, a decade has passed without the country falling into a recession. That's crazy. And let's not beat around the bush. Crypto, just as much as traditional finance, crypto has greatly benefited, in my opinion, from this bear market for the past 10 years. So my question is, just how big of a bubble are we in right now? Meaning, just how big will this next pop, this next recession be?
I don't know how big the bubble is. I know it's bigger than 2008, significantly bigger. And you can see that in stock market valuations. And it's no longer just one bubble. What happened in 2008 was primarily concentrated in real estate. And now it's spread to every financial asset out there. In many ways, it's also spread to crypto. You know, one of the reasons we've had these massive rallies in crypto is because once you've invested in, real estate bonds, equities, junk bonds, commercial bonds, municipal bonds, student loans, automobile loans, commodities, et cetera, and all of those are hyperinflated. At some point you go, well, what else is left that's still delivering yield? And you see this little crypto market on the side, like, let's throw some billions into that, see what happens.
So Bitcoin, the altcoins, they've only benefited from a thriving traditional market. So let's talk truth. And I'm not talking about from a tech perspective. There's so many great things happening with technology right now in the cryptocurrency space. For me, I'm talking about what's going to happen from an investment perspective when this recession hits. Because big money is going to be looking for the next risk-off investment, low-risk investments, as opposed to higher-risk investments. And the higher-risk investments, they'll be the first ones to tank. Some people call that FUD. That's just the honest truth. I think that's why you subscribe to this channel. But in general, what will happen to the cryptocurrency market potentially in this next recession?
If there is a massive crisis, first of all, what most people don't realize, I think, is that in the beginning at least, crypto will crash hard. And the reason it will crash hard is because a lot of the venture capital, corporate investments, and private investment from individuals that is based on cheap money and disposable income and excess cash in portfolios, et cetera, like in every other part of the economy, will dry up, right? When people get scared, when there is a recession like that, they pull back their investments. And they're going to pull back from crypto too. Crypto needs, what is it, $100 million a day in order for the price to just stay where it is. I think some number like that. I don't remember exactly, but based on the new supply that's created.
1,800 coins.
Right, that's just Bitcoin. But, across the entire industry, if you only take Bitcoin, 1,800 coins, what is that? $18 million. People need to buy $18 million of Bitcoin just for the price not to go down, right? Just to stay exactly where it is every day, right? On top of what they already own. Mm-hmm. So that means that's a fair bit of investment. And times 365, you're looking at a good chunk of change every year just to maintain parity. So from that perspective, I think the first order effect that happens if we have a massive recession is crypto crashes because all of the liquidity dries up, which is the classic effect and first symptom of a recession. Then there's a number of possibilities, one of which is that it emerges as one of the safe haven assets, and people try to exit the things that are crashing faster for the things that are crashing slower. And you see the classic pattern where gold and Bitcoin, yen, and Swiss francs, and a couple of other, metals and commodities either stabilize or even start growing in price.
Again, this interview is from the What Bitcoin Did podcast. There's a link down below in the description. Subscribe. I recommend it. But the point is that Bitcoin, the entire crypto market, has only known thriving traditional markets. It was born from the 2008 financial crisis. Crypto, along with traditional assets, have only thrived from it. Does that worry you? Seriously, does that worry you? Do you think about that? Let's just say, for example, if the recession hits at the end of this year, in December of 2020, will you wish you stacked more Bitcoin or more altcoins? Do you think about this? I think about this. Nobody else seems to be talking about this. I'm talking about with alts specifically. Yes, Bitcoin. People talk about this with Bitcoin all the time, but with altcoins, this worries me. I'm just being honest. But what do you think? Let me know your thoughts down below in the comments. Just to offer a little bit more perspective, I mean, first off, you know that Bitcoin is designed to be an asymmetrical risk-off hedge against traditional assets. And asymmetrical hedges are meant to take away risk, give you less risk in a portfolio. As opposed to altcoins add more risk to a portfolio. But believe me, I get it. The potential reward from potential altcoin gains, I get it. The reward is high reward as well. I get that. High risk, high reward. And again, I don't think I'm saying anything too revolutionary when I say that these altcoins, they're way more illiquid, not all of them have a fixed supply, and the risk when investing is significantly higher, as are the rewards would be significantly higher. You ask me why I like Bitcoin best as an investment? That's why. Now, that's not to say don't ignore the rest of the market. There's huge potential in some of these altcoins depending on what traditional markets do and depending on the progress going on with some of these alts. But going into this next decade for me, I'm going to be heavily focusing on BTC and looking at the entire market as a whole and picking my investments, picking the choices based on what's happening in the world economy as a whole. You tell me what you think. If you have a different opinion, let me know down below in the comments. And by the way, hit subscribe, hit like. I will keep you updated and you do not want to miss one of our daily videos. All right, that is the video for today. My name's Austin. Like always, I'll see you tomorrow. Hey, if you're still here, there is this one tweet I thought was inspirational. This was Jeff Bezos' office in 1999. People forget. This was Bezos' office in 1999 for Amazon.com. Puny sign. Sad desk and office, if I may say. But everybody starts somewhere. Keep going. Jeff saw the vision. He worked his ass off. And he got rewarded. This is true in crypto, true in life. It just, this is a reminder. I like this. All right, that really is the video for today. My name's Austin. Like always, see you tomorrow.